For many years, I've been involved in raising capital for early stage high potential companies. I was an ASOB sponsor for many years, and I work with many other ASOB sponsors, the Australian Small Scale Offering Board. And this was in an era where it was really challenging to raise funds for early stage pre-revenue businesses. And of course, that platform was incredibly successful in raising, well over hundreds of millions of dollars for early stage businesses. And I really came to the party focused on the smart capital elements of those programs to make sure we were bringing not only capital around businesses, but the right people who could open doors and help accelerate businesses. In the private equity landscape, it still remains very challenging to raise those sub 1 million amounts, and typically anything under 5 million can have its challenges to try and raise those amounts. And the reality is you really need to be very careful about who you partner with in terms of advisors. There's a lot of lackluster services, and the reality is it's fiddly and it's hard work. And unless you have a bank of really deep relationships with sophisticated investors that you can reach out to and go through it very methodically, if you're working a mandate, a lot of people bug out. They flick emails out, and if they don't get success, they move on to the next mandate. So I know it's a very lackluster space. It's really hard to raise capital. And so, I've done it over many years. I do enjoy doing it, but it is hard work. And so this year we are recalibrating, that side of the practice, and we are taking on a small exclusive number of mandates, because my philosophy here is if we're going to take a mandate on, we're going to close the capital raising. We won't leave that organisation side till the capital is closed. And so really working it hard to make sure we're connecting constantly in with the right sophisticated investors, the right high net worth individuals, the ultra high net worth individuals, and of course the family offices, and potentially even the PE and the VC firms, but bringing everyone together at the right time. So there's a bit of a flow to the capital raising project. And I'll just talk you through one case study. We worked with a very impressive financial services technology business, so a fintech. And we raised the seed capital, and we brought the A team around the business. And then we have been, involved in raising the Series A and getting the business to the next stage of its development. And every step of the way, we've not left the organisation's side, and there's been constant referrals, looking at strategic partnerships, looking at strategic joint ventures, looking at people who can bring a check to the table, looking at people who bring a talent or a skill set or a development house to the table. The reality is you've got to be very creative, and you've got to be very diligent if you're going to get a capital raising away in these sort of smaller space areas. And what that does is it gets a business off the ground, it gets it, with the right ecosystem sitting around it, and it makes it much more attractive if you go to a major PE VC firm who might want to come in on Series A or B or C. It's a really interesting space. I love it. I love seeing these businesses evolve and get off the ground. And I think it's a real era to rethink the way you do capital raisings and how you marry it up with the right talent and the right people. So I am taking on a few new mandates this year. I've got a great little group that we're working with and very successfully with at the moment. But I am taking on a couple new mandates this year and working with my business partners and bringing the A team back together to do really successful capital raisings. So love to have a chat with you about that and how we might be able to help bring your ideas, your business to fruition and secure that really critical seed or Series A funding for your business.